don't skip away from this video because it also can help anyone who's trying to get an apartment, anyone who's trying to put a down payment on a car, anything like that, because you can also secure lower interest rates for those as well. What's going on, YouTube? Welcome back to another amazing video. In today's video, we're going to be talking about credit cards and why you should care about getting a credit card. We'll even go into depth on getting a credit card, like what the process should be, and different cards that you should probably look at if you're a beginner in credit or whatever level you're at. So the reason that I decided to talk about this topic is for anyone who's trying to go into real estate. You want to be able to secure the best loan rate possible for whatever house you're trying to purchase. And many times banks won't even loan you any money if they don't see that you have a good credit score, because a credit score basically tells a lender that you are able to pay back this loan without defaulting on it. And I want to put a huge disclaimer that I am not a financial advisor. So if you need financial advice, make sure you go talk to a financial advisor. And another one is that do not spend more money on a credit card than you would normally spend in your day-to-day life. Don't get a credit card and decide, oh, I'm gonna go buy this nice plasma screen TV. That's a horrible decision, and that's how most consumers end up in debt. And with that, there are 6 main ways that your score is calculated in order for lenders to know how likely you are to default on a loan. The first way is the length of credit history. So yes, you have to have your credit for quite some time in order for your credit history to go up. So you want to have I believe at least 2 years in order to be in the good rank. And what this shows lenders is that you can keep credit for a long period of time without defaulting on loans or closing accounts and different things like that they don't like. The second thing is the amount of credit that you have available to you. So that means that if you have credit cards with $10,000 limits or $5,000 limits, they want to see how much credit you have available to you, because they want to know how responsible you are with that credit. So the higher the credit limit, the better it is for you, because they'll see that you have more credit and you're more responsible with it. The third one is how much credit you use. So this is also called a credit utilization rate. They want to know if you're spending over a certain amount on the card, because if you do, then you're more likely to default on the card. And the recommended amount is 30%. So in the previous topic, I just talked about you having a high availability to you. So let's say that you had $30,000 worth of credit cards. And let's say that you were using 30% of that. So that means that you're using about $9,000 on that card. They would love that versus you having only 20,000 and you're using 9,000. That's almost 50%. So simply by having those other cards still open, you are decreasing your utilization rate, especially when you get credit limit increases. The fourth one is diversity of loans. So you want to have different type of loans. You'll start with a credit card, but you want to venture off into getting a home loan, a car loan, different things like that. You want to show lenders that you can deal with multiple different varieties of loans. The fifth thing would be total inquiries. So that means whenever you apply for a card, there's a hard pull on your credit, basically to show that you're trying to get your credit score checked so that you can be approved for a loan. Now, don't think about this one too much, because you have to apply for loans. It's just like the slippery slope with you have to have experience to get the job, but you need the job for experience. Credit lenders can still approve you regardless of how many inquiries you have or how low your credit score is if you get something like a secured card or something like that, which we'll talk about in a moment. And the last topic is the most important one. You want to make on-time payments. Anytime that you miss an on-time payment, it goes onto your credit report for 7 years. So you want to make sure that you're making as many on-time payments as possible. Don't miss a payment. I would put my cards on auto pay so that I would never miss a payment, because a missed payment will significantly decrease your score. So if you aren't already familiar with different cards, this is the section for you. So the first thing you want to do, if you're a complete beginner, you've never had credit before, you're brand new to the game, the first thing you want to do is get a secured credit card. So a secured credit card is a card where you'll basically put money down on the card and they'll give you the same as cash back to you on that credit card as a credit limit. That way, if you ever were to default on the credit card, they already have your money and they can put it back towards the card. So it's beneficial to anyone who has zero credit or very low credit scores. Typically with the secured cards, they are also refundable deposits. So as you continue to use those cards over time, they'll refund you the deposit if they feel as if you're doing very well with your credit card, and they'll most likely upgrade you to a card that is no longer secured after they refund you the deposit. So after about 3 to 6 months, what you would do is you would apply for another card. This time you would get a card that is not secured. I'm going to leave card recommendations closer to the end of the video, and I'll leave timestamps down below. These cards typically won't have too much of any like rewards or anything like that, but you'll be moving into a new card that can increase your utilization rate because you're increasing your credit limit, and it'll also allow you to build your credit even more than you were before. If they do have cashback, the cashback will be very low, unlike the next cards that we'll be talking about later on for expert credit users. After that, you'll typically apply for a charge card. Now, a charge card is going to be a higher end card that is probably going to offer you more bang for your buck. So you'll probably be getting more cash back. You'll probably have more like advantages with that card, but it still isn't the best card. So you'll still get many different benefits, but you'll want to get this next card. So eventually after that, you'll be able to apply for what is known as a rewards card. So it can be anything from the Amex Gold, Chase Sapphire Reserve, anything like that. These cards basically give you points for spending money on the cards. And this is especially beneficial for anyone who is educated on finance, because you can go and spend money on stuff you would normally spend it on, like your rent, your utilities, things like that, gain points on that, and have at least a single free trip every year to basically wherever you can afford with those points. And not only does it allow you to do airfare, it also allows you to rent cars, and you can also do hotels and different things like that. Now, the beginner secured card that I recommend is the Capital One Platinum Secured Card. So this particular card has no fee. It builds your credit score. It's secured. It has zero fraud liability. That means that if something happens and someone gets a hold to your card and they spend money on it that you were not planning on spending, you have no liability for that. And the company will basically protect you behind that. It also allows you to monitor your credit, which a lot of people feel as if you check your credit score, it'll lower your score. And that is a big myth. That is not true. You can check your score through things like Credit Karma. Some of your cards allow you to check your credit score and different things like that. So the next card that I recommend that you get is the Discover It card. The Discover It card has no fee. It builds your credit, zero fraud liability, just like the last one. It also offers you 1% cash back, and that's on every purchase that you make, and 2% cash back on restaurants and gas. So this card is getting into that realm where you're finally starting to get cash back and you're still building your credit score. So what I recommend is that if you get a card like this, if you get any card that has like certain things that you get cash back on, I would try to find a way to stick like right on the back of the card, or put a sticky note on the back of the card so you know exactly what you're getting cash back on. This way, when you're out and using the card, you won't be confused by, oh, which card was my gas card and which card was my phone bill card. You'll already know exactly what to use because you'll have it on that card. The next card that you should get after that, which is like a mid-tier card, would be the Citi Double Cash card. Now, this particular card is great because it gives you 2% cash back on everything. You get 1% when you purchase something, and you get 1% when you pay it off. So 2% cash back on everything. There's no fee. You still have zero fraud liability. It also offers purchase protection. So what this means is anything that you buy on the card that's within the actual terms and agreements, anything that you buy on the card, let's say that you lose it, or let's say that it's damaged, it will protect you up to $10,000. So that means that they'll basically pay it out for you up to $10,000 with proof and everything like that, which, as you can probably tell, is a major step above the Discover It card, because that means that if you go out and buy something that ends up breaking, you get your money back and you don't have to worry about, oh, I just spent all this money on this thing that I can no longer use. And another great thing about the Citi Double Cash card is that it has a 90-day return protection, a return protection policy. So with that return protection policy, they give you $500. So if you buy things that are within the limitations that are within $500, and let's say that the return policy for wherever you bought it from is like 14 days. Well, if it's past 14 days and they say, oh, we can't refund that for you, you bought that 20, 30 days ago, you can easily use the card to get a return on it up to $500. So that's extremely beneficial for anything that maybe you need a longer time to use and you end up not liking it in the long run, or maybe you bought something you weren't going to use it right away. Like let's say it's Christmas time or something like that, and you wanted the kids to open it, but you needed to buy it at a good price. So this is extremely important for anyone who does things like that. The next card that I would recommend is the Chase Inc. business card. Now, this particular card has no annual fee. You get 2% on gas, 1% on everything else. But the great thing about this card is that you get 5% cash back on all phone, TV, and internet that you spend on this card. So that means that those normal everyday purchases, you're getting 5% back on all of that. Not only that, but it allows you to build a relationship with Chase. And Chase has a great program when it comes to the next card that we're going to talk about. And that next card is the Chase Sapphire Reserve. So the Chase Sapphire Reserve gives you 3% on travel and dining. And it gives you 50% on all Chase points. So the great thing about this is that if you have other Chase cards, you can merge those points onto a single card. So if you take all of your points from any Chase card that you have and you merge it onto the Chase Sapphire Reserve, you're getting 50% more of the points that you are getting from any of those cards that you decide to transfer it from, which essentially means that anytime you're spending on the 5% cash back when it comes to the TV, phone, and internet, you're actually getting 7.5%. And anytime you spend on the 3% on the travel and dining, you're actually getting 4.5%. So that makes the Chase Sapphire Reserve one of the best cards for you to get, because you're getting 50% more on whatever points you're getting from any Chase card that you own. So next I want to talk about a couple myths. So the first myth is that paying interest will help increase your score. This is completely untrue. You can grow your score without paying any interest, not a single dime, by putting your card on auto pay and making sure that you have it for the full balance. You only want to spend what you would normally spend on that card. Do not spend money on that card that you cannot afford, because that is how people mess up with growing their credit score. The next myth that I want to talk about is checking your own score will decrease your score. As I talked about before, that is untrue. You can check your score through free mediums like Credit Karma. Some of your cards let you check your FICO score, different things like that. Your score will not be compromised just because you decide you want to check it. So you can still check it through those free mediums. The third thing is that too many cards will decrease your score. This basically is completely untrue. And the reason being is because we talked about before that when you have more cards, you have a higher utilization rate because you have higher access to credit lines. So it's better for you to keep additional cards that you don't use because you're keeping a higher credit line on those cards. And with that higher credit line, you're allowing yourself a better utilization rate, which means that lenders are going to look at you and say, oh, this person can manage their credit better because they're not closing cards and they don't have a high credit utilization rate. Another myth is that you should close all unused accounts. Now, like I just said previously, that is completely untrue, because you want your unused accounts because they keep your credit limit, your credit utilization rate low, and they keep your overall credit limit high. And the last myth that I want to talk about is bad debt. So a lot of people feel as if debt in general is bad. And I have to disagree with this. And the reason being is because you can put your money into certain things that may be considered debt and they still grow you money over time. So this is a very bad myth that a lot of people have, and it keeps people from getting credit cards, and it keeps people from growing their score and getting these lower interest rates on different things that they should be getting it on. So just a quick recap. Credit cards are given a bad light in media today. You probably seen the episode of Corey in the House where he basically got a credit card and he just went and spent it on everything. However, that is completely untrue. Credit cards are not bad. They are weapons, much like guns. Guns don't kill people. People kill people. So just like that, cards aren't inherently bad. People who don't know how to use cards are the ones that end up in debt. And this is why I have to push hard to tell you all that you cannot use your card haphazardly. You need to make sure that you're not spending your money on random things that you would never use, like that new vacuum cleaner for your ceiling or that special lawnmower for your trees. When used properly, credit cards can be completely beneficial to you. They can offer you points, get you free flights, free hotels, free rental cars, different things like that. So if you don't know how to use credit, it's best for you to learn because you will benefit from it, definitely. Make sure that you follow me on Instagram because I'm going to start posting on there more often about different things that I'm doing within my own businesses and entrepreneurship and different things like that. But that's going to wrap up this video. So make sure that you like, comment, subscribe, hit the bell for notifications so that you can be notified for my upcoming videos. I'm going to drop a lot of nice content videos like this one in the near future. And until next time.